Market outlook, trade deal impact on Indian markets. Market alert, a looming tariff deadline could trigger unexpected market turbulence. Indian equity markets ended the week on a cautious note, preparing for the U.S. decision on tariffs due July 9. The benchmark Nifty 50 slipped 0.68% to close at 25,461, while the small-cap index rose nearly 1% and mid-cap stocks gained 0.6%. Foreign institutional investors, FIIs, who had been net buyers for 2 straight weeks, sold off shares worth 6,604.56 Indian rupees crore last week. Domestic institutional investors, DIIs, meanwhile, continued their buying spree for the 11th week in a row. On the sector front we saw Realty down 2%. Banking down 0.7%. FMCG down 0.7%. Consumer durables up 2.7%. Healthcare up 2%. PSU banks up 2%. IT and media each up about 1%. While Indian markets faced some headwinds, U.S. stocks powered ahead. Both the S&P 500 and the Nasdaq Composite hit record highs after the Senate and House passed President Trump's reconciliation bill midweek. All eyes now turn to July 9, when the 90-day pause on reciprocal tariffs is scheduled to expire. Global markets in Europe and Asia have already shown signs of nervous profit-taking. And this is the part most people miss: even small shifts in tariff policy can trigger outsized moves if sentiment turns suddenly. Looking ahead, the outcome of several trade discussions will drive market direction. But here's where it gets controversial: some analysts argue that the current dip is too shallow to signal a full reversal. Instead, they see it as a healthy breather in a long-term uptrend. Is the bull run set to continue? Let's break it down. 1. Pullback versus uptrend. The Nifty index closed slightly lower after 2 weeks of gains. If the pullback remains limited, the worst-case scenario points to a test of the 20-day moving average, DMA, around 25,160. This DMA simply tracks the average closing price over the last 20 trading sessions. As long as the pattern of higher highs and higher lows holds, the uptrend remains intact. 2. FII short positions. Since March, FIIs have been biased toward short positions, meaning they've bet on a market decline, and they added nearly 30,000 short contracts this week alone. But when markets move higher, these shorts can be closed out quickly, fueling sharper rallies, often called wave 3 of an impulse. In May, shorts peaked at 106,000 contracts. Last week 70,000 were closed at expiry, yet 30,000 new shorts came in. The gradual rise in market lows suggests bulls and bears are in an ongoing tug-of-war, but the upside still holds potential. 3. D2 support. Domestic investors are the second largest force in futures markets. Although they've trimmed some positions, they keep buying on dips. Their steadfast long stance has helped markets stay above critical levels for the longest stretch in recent memory. 4. Momentum swing indicator. The daily swing reading fell to 44 after this week's correction. A reading below 30 or 40 usually signals an oversold market. Since 44 isn't extremely low, the odds of an immediate bounce are modest. However, if the market does rally from here, it would represent a rare opportunity, as it would defy a swing that isn't deeply oversold. Sector rotation snapshot. Weekly timeframe. Weakening. Financial services and private banks show falling momentum and relative strength. Lagging. Pharma shows early signs of improvement, but FMCG continues to weaken. Improving. IT, realty, metals, MNC, and consumer durables are gaining strength. Auto and energy have mixed signals. Leading. PSE, PSU banks, infrastructure, and oil and gas have stopped losing ground and are building strength. Daily timeframe. Weakening. IT sits at a critical inflection point, watch it closely. Lagging. Many sectors are here but most are picking up momentum except private banks, financial services, and realty. Improving. PSU moved from lagging to improving. Auto is improving but losing momentum. Leading, consumer durables, infrastructure, metals, and oil and gas show strong outperformance and robust momentum. Stocks to watch this week. Divis Lab, Fortis, Glenmark, Marico, Muthoot Finance, Nazara Technologies, HDFC Bank, Infosys, Reliance, and Geo Financial. This is the part that sparks debate. Is the current dip a chance to buy the breakout or a warning of deeper weakness? Do you believe institutional flows mask real risk, or are they the foundation of a steady rally? Share your thoughts. Will markets conquer new highs after July 9th or face a sharper downturn? We want to hear your views, agree or disagree. Let's discuss below. Cheers. Shishir Astana.